institutional adoption of digital assets as an infrastructure booster.
When I was asked to talk on this subject, I thought there were like two angles to take it. So I have two presentations, and based on your vote now, I will choose which presentation to go through. So we all remember, we all fell in love with Bitcoin because it was decentralized and anonymous, you know. So who thinks that institutional adoption is good for the space, for the blockchain space? Please raise your hands. Okay, 30%. Who thinks that institutional adoption is bad for the space and is taking us in a completely wrong direction? A little bit fewer people, so probably, yeah. So let me keep the serious presentation. And if you look at the adoption levels today, let me just see. If you look at the adoption level today, I mean, crypto has become the one of the asset classes. If you watch the news, Bloomberg or whatever, I mean, everybody talks about the price of Bitcoin and some of the other crypto as much as the NASDAQ or whatever, you know, indexes. If you look at different figures among the fund managers, family offices, the crypto adoption levels up to 5% of the portfolio are somewhere between, you know, 25 and 35%, which means it's there. The crypto has arrived. If we look at the use by large, you know, companies and large technologies, we'll hear those stories, but there have been massive cases already. As we know, Visa and MasterCard have been working with crypto directly. Visa Direct supports a few wallets like MetaMask, etc. Recently, the Paxos PayPal project got Swift very interested, so Swift is supporting that. So if we change the angle, a lot of companies during the NFT boom 2 years ago discovered that using NFT can be a way to bridge the gap between the company, let's say, I don't know, Procter & Gamble or whatever, Playboy played with crypto, just to smile for a second, and direct consumers, eliminating intermediaries like Googles and Facebooks and whatever. So there's been a lot of use on that. We're hearing about tokenization is coming, tokenization of real estate. I'm an advisor in one of the projects in the US, which works on the real estate tokenization. So there's quite a few stuff. I'm a big believer in digital twins, for example, where we will all have digital twins that, you know, represent us in the metaverses and in the expanded crypto ecosystem. And so what's happening is institutional adoption is pushing pressure on the blockchain industry to improve user experience, user interfaces, and to deliver more robust solutions. You know, enhanced performance and scalability and speed, interoperability between chains, security and compliance have to be there to, you know, to be used by serious companies. It has to be integrated into existing financial infrastructure. Like, for example, there are a couple of banks in Switzerland that I use, Signum and Amina, that have both fiat and crypto angle, and it's fully, you know, interoperable. So solutions like that, and of course the institutional grade custody provided like by Coinbase, by Fireblocks and Gemini, and some of the other institutions. I don't want to get into the boring stuff about scalability. Each protocol takes its own stance on the way forward. Like we at Everscale, we went for multi-threading, which is, you know, a more advanced version of sharding, where when the series of smart contracts hit the network, it ensures parallel execution of smart contracts. So it's scalability at the level of executing smart contracts on parallel. You know, Solana recently got a nice solution. I think it's called Firedance, if I remember well, which is using another technology, et cetera, et cetera. There are tons of ways, including, by the way, ZK zero knowledge rollups and layer 2s, which we talked about at the panel already. If we take a look at the interoperability, which is very important for, you know, for large adoption, there are also a few approaches. There are layer 2 protocols that have been out there. There are swaps and bridges. So atomic swaps, which I think work better. Bridges, I think, are a little bit more controversial, as there have been tons of, you know, security incidents. And also interconnect ecosystems like Polkadot and Cosmos and some of the other folks have been pushing for a long time. This is layer 0 solutions or blockchain of the blockchains, whatever is the right name. I'm intrigued with the latest solution from Chainlink, which supported a few blockchain protocols, and as I mentioned, got attention of the guys like Swift. So there are more and more takes and angles on interoperability to improve on that one. And then, of course, security and compliance. I mean, smart contracts can be vulnerable. There is tons of crypto being stolen every year, and there is tons of security breaches. So, for example, on the security side, I'm a big fan of formal verification, which is, I'm actually, as a disclaimer, an advisor and a shareholder in the companies that does formal verification. This is like next level in security of smart contracts, where you do mathematical proof that the code is correct and there are no backdoors like there can be, just as an example. I already talked about the integration of blockchain with traditional financial systems. There is going to be more and more stuff coming around cross-border payments, trade finance, supply chain management, where you would need to ensure that the banks work with crypto wherever crypto is used. And then we also already mentioned the institutional-grade custody solutions as an important element in ensuring the safety as the adoption continues. And I want to finish on, and then maybe leave room for one or two questions. Finish on the 4 examples, of what can be a massive acceleration of adoption. So you see 4 faces, which I'm sure are familiar to you. Telegram has built digital wallet into the Telegram itself with a protocol called TON, and there is more stuff coming. There'll be a browser for the apps shortly in Telegram, et cetera, et cetera. And Telegram is approaching 1 billion user base, so they're pushing adoption on the side of the messengers. Mark tried a couple of times, big time. First, as you all remember, with the payment system linked to Facebook, didn't work, unfortunately. Regulators did not allow. And then, of course, Mark was the reason for a metaverse hype, which was extremely short. But I'm sure metaverses will come. We all count on Elon when X, Twitter, will be doing something with crypto. They got licensed last year in September. So, and we're all, I guess, waiting for X to start doing something with the crypto. Obviously, starting from payments within the platform itself. And Sam, I mean, everybody knows WorldCoin, right? I don't know if you had your eyes scanned already and got your take on the future universal income, universal basic income token, WorldCoin. And I'm sure Sam will continue to push this forward, as well as given his OpenAI leadership. I think that intersection of AI and blockchain will continue to accelerate. Vitalik just posted a couple of weeks ago a very nice article, which really got me thinking a lot about that AI is very centralized, and blockchain with its decentralization, transparency can bring improved governance to the space. So on that note, I would like to summarize that my personal opinion is institutional adoption is great for the space because it makes pressure on the protocols and the solutions to deliver much better UI UX. You cannot do solutions on X which don't have good UI UX, and also with the other stuff, right? And also on scalability and interoperability. So I personally welcome that. Thank you very much.